What is up, guys? You may or may not have seen me before. I am really Realm, and I'm bringing y'all a video talking about Forex here. You may notice my voice, it is sounding a bit off from, I think it's just allergies. It's nothing too serious, but yeah, anyways. I'm going to be talking about Forex. I'm going to be taking a look at dollar index, euro, British pound, maybe a couple others, we'll see. But yeah, let's just get straight into it. This video I am producing a bit differently than what I would usually produce it as. For example, usually I like to look at the market beforehand and do all my analysis and stuff before I make the video. But this time I'm actually doing it as I go. Okay, I'm actually doing my analysis and giving my thoughts on it as I go throughout the video. But since I've already been doing this for a bit, I already know kind of what I'm looking at. Like, I already have an idea of what is going to happen. And basically the analysis is just to see if the original idea I have is supported or not supported. The idea is that we're going to head higher here to take out these highs, remove everybody here who is shorts and have their stop losses here, while also accomplishing a sentiment change to bullish, and then we're going to dump afterwards. So overall, I'm bearish on dollar index long term. Basically, in the next 4 to 6 months, I am bearish for dollar index, and I have been bearish. I've been bearish since December of last year. So before the turning point here, I've been bearish since then. Obviously, all throughout here, I've been bearish, but obviously it's been ranging. But I've always been looking for reasons for this to continue lower. But now we're coming up to a important turning point, in my opinion. It's almost close to time for this to start running lower, most likely in June or July. I think I would say more July than June, but yeah, it's close to time. It's also gonna align a bit with what I said in my previous video, which I mentioned that there may be a quick crash in the stock market indice NQ Nasdaq during June or July. What we're gonna see here might be in correlation with that as well. Also, there's a step-by-step process I follow for when I do my analysis. I start on the monthly, then I go to the weekly, and then to the daily. But since I've been doing this for a long time, I do include some other stuff now, and I do look at higher perspective time frames now as well, just to get a view of things. Here we have the yearly chart. As I said before, I do believe we're more likely to head lower long term. Let's drop down to the 6-month chart or half a year chart. The idea that would support this would be this trend line we have here. So retail traders are really going to be looking for this to act as support, and this candle kind of gives that idea that this is support, and so people are going to be looking for higher here, and so we're going to cannibalize those by ripping straight through it. We also have a market structure shift here, so that's also of very great importance because this is done on the 6-month chart. Because look, we had bodies here, then we ran those bodies, so that counts as a stop run even if it didn't break above this wick. We can see this whole wick as erroneous price action, and just using the bodies, that is a stop run taken out by side liquidity. And then what happened afterwards? We had a very aggressive down candle form. So that is important because that is displacement. And also measuring this wick here, you can see that we traded to the consequent encroachment and never left any bodies there. So that's a bearish signature. Also, I really hope you guys don't mind my voice too much. There's nothing I can do about it, to be honest. I mean, I feel like I need to make this video, and yeah, it's just unfortunate that I'm sick right now. Another thing to note here is that we have this inversion for value gap. So you can see we left bodies down here. So this is more highly probable to be used as an inversion instead of this to go higher. You can see that we are trading right at the consequent encroachment right now. But this candle is a 6-month candle, and we have 1 month and 11 days left. So that means that we still have time for this to go up here on the lower time frames for a false breakout, and then come back down to either close right at it or below it, preferably below it, and even better if it trades down here and closes down there. That'd be even better. Here we drop down to the quarterly chart. We can see that we have relatively good lows here. And so that'd be a very, very nice and obvious target there, because retail is going to see this as a support zone. And so we're going to cannibalize them by running straight through it. Same with the trend line. So we have a trend line going here. So that's a retail trap. And we also have a support zone, as they call it. So that's another retail trap. And so a lot of people are going to be wanting to buy here. They're going to put their long orders there. Stop losses are going to rest below down here. Smart money shorts up here and buys it back to the sellers down here. So there's going to be sell stops below these lows. Sell side liquidity. Yeah, very, very simple. Here in the price action, most recent, right? We do have a buy side imbalance, sell side inefficiency, and then a sell side imbalance, buy side inefficiency going in the same prices. So the algorithm has delivered very efficiently on these prices here. So all of this here is balanced. This is a balanced price range. And so it's going to be really, really, really hard for price to be able to go through this. It's going to be like a brick wall here. You can use this. You can reference this, or you can reference this for value gap. We have 3 candles going up. We still have time to create a 4th one. Usually after the 4th one, it's like, okay, it's gonna, it's gonna change. It's gonna go a separate direction, right? It's almost time for us to run lower. The time window that has to occur in, or that is highly probable, is the month of July. So July is the kickstarter. You may start seeing it start in June. Like the high can be created in June and then displace lower in July. Or it could create the high in July and then displace lower during that same month or the next month. But in terms of time, like just looking at time, July is highly probable from where things are going to happen. As in, there's going to be a run. There's going to be a run to liquidity. Where's the liquidity? Down here. The algorithm's going to try to gravitate down here. And it's going to do it during that time, July. Or it's going to begin at that time, I should specify. It's not going to do it at that time. It's going to begin the run there at that time. So June or July, more likely July. You can also see this as a consolidation and then a return to consolidation for a market maker sell model, but on a very high time frame scale. And I'm sure in the future, like in the way out in the future, we're gonna make it down here, right? Because this would be seen as original consolidation and this big market maker buy model. Sorry, market maker sell model. Again, we have 1 month and 11 days remaining in this candle as well. So it does have enough time to come up, trade into this fair value gap and this one, touching the consolidation here, and then come back down to close, down here somewhere. Again, I wouldn't be surprised if it ends up closing somewhere down here, past these bodies, or maybe past consequent encroachment there of that wick, like that. So now we drop down to the monthly. So here's the thing. Retail is obviously going to view this as a bear flag, right? And so they're going to expect a move like this. That's what they're expecting. And so in order to use, this is a retail trap here. Like, in order to cannibalize them, it's easy. We just run it above here. Everybody turns bullish. And then we just dump it. Very easy. Very simple. Break it above the highs. Everything I've been saying here is literally all against retail. Literally. Because we started with the higher time frame phantom trend line. Everybody's looking for higher. We started with the target, which is these relatively lows. And so people are going to be looking to buy there and then have their stop loss below them, which turns them into sellers. So people would be looking to go long here instead of down, which is what smart money is going to do. And then same thing here in the monthly chart. People are going to look for lower here, right? Which is correct, but if we do this first, if we come above and break above those highs, people are going to quickly switch to being bullish, because they don't really look, or they're most likely not looking at this far out. And even if they are, their emotions take over their decisions pretty easily. They would be super bullish here immediately. So this does a couple things here in the monthly chart. It removes the idea of the bear flag, so people wouldn't be so eager to go short once it's breaking out, but it also acts as a fake out, as a fake breakout here. So it also cannibalizes those who use breakout retail trading ideas where they buy on strength, because they think, you know, that's the view, is that they think that means it's strong, but it's not. It's manipulation. Exactly what happened over here. You see this large consolidation? It came up, it pumped up, took out everybody here, and then dumped. It's basically the same thing here. Now, what I like about this as well is that obviously we have this bear flag retail trap here, but over here on the left we have a breaker. This is a bearish breaker. But even more important than that is that inside of this breaker we have a Reaper fair value gap, which is really that's a really strong PD array, and I believe it's very likely it'll come out to trade into that. And once it trades into it, there's going to be a huge massive displacement downwards. In fact, if we do get the crash in June or July for Nasdaq, some black swan event, I don't know what it is. It could be another outbreak of a virus, as I've said before. I don't know, something like that. Mostly July. I'm focusing mostly on July. That's when it's most likely. But if that does occur, that's going to be the justification for this running suddenly and dropping lower. But the outbreak or the black swan isn't the catalyst for the market dropping here. The market is the catalyst for the black swan. It's backwards. A lot of people think, oh, if something happens in real life that affects the markets. No, they're wrong. It's actually the markets that cause the things to happen in real life. And I've already kind of explained in a past video how I said smart money, I believe, are the same entities who control the politicians and the talking heads. And obviously, the politicians are supposedly the ones that do things around, right, in the real world. And so basically what I'm saying is that smart money is just doing their thing in the market, and in order to justify it in the real world, they have to do real world things through their puppets. That's how it works, okay? So I mean, there you have it. That's your premium PD array right there. That is very highly probable to give a very instant displacement reaction lower here. Aggressive run towards these lows, and obviously ultimately below here. And I marked out these before. You could also mark out these. Same thing. We're heading lower. But yeah, basically the monthly chart, we have this range here. And whenever we have a range like this, it's just very lovely. It's my favorite thing to have a range, see a breakout, like a fake out, and then the real move ensue. It's just so nice because we have the float building up on both sides. So there's liquidity building up on both sides, right? And so what smart money does is, well, obviously they know this. They know there's liquidity up here, so there's buyers up here, and they know there's liquidity down here, so there's sellers down here, right? And so simply they just run it up here to the buyers. Everybody starts buying from who? Smart money, because smart money is selling to them at a premium price at this premium PD array using inverse psychology on all the retail traders, and then they just deliver price lower, take the profits here. Obviously, don't take all of the profits there because ultimately the terminus is down here. So they take some profits here and they continue taking profits until they make it down here. And so just everybody gets screwed. Everybody gets screwed. Why? Because people are going long here, so they're going to place their stop loss below there. They get taken out, and then the people who went long here already said that. Sorry. The people who went short like here, right, just using it as a resistance zone, they also get stopped out because their stop losses are going to be up here. And then the people who buy down here because they think we're still in a range once we deliver lower, their stop loss is going to be here as well, because where else would they put it? Everybody's taught to put their stop loss below lows. And so that's going to get run out as well. Like, literally everybody just gets wrecked. It's amazing. I love it. Now, also knowing the seasonals for dollar index, the month of July is slightly bearish, though August through November, it is seasonally bullish, but like that's fine. it doesn't have to perfectly follow the seasonals throughout, but having July as a slightly bearish month actually, I think, gives a lot of high probability, because as I've said, July is the most likely probable to create a high or displace lower. I also do look at when the highs and lows are created for each month during seasonals, and I am seeing, or from my notes, that July does create a lot of times a long-term high on the first week of it, and then June also creates an intermediate high anywhere from the first to third week of June. And so all of that is like, that's adding to the idea that this is going to go up here, create a very important high, and then displace lower. I don't know if quarterly shifts are really that helpful here, but you can look at it as, you know, this candle closes as an up candle, May, then you have another up candle, June, and then July, that's where it can change, right? Because that'd be the third month. It doesn't necessarily have to be an up candle. It can be a down candle. But that's like where the turning point would occur. But again, it could happen in June, so I'm not sure if quarterly shifts would be too helpful there. But it is something to consider. And then here we have Treasury bonds. These markets are in correlation with each other. They're inversely correlated. You can see that Treasury bonds here are dumping, which means the yields are skyrocketing. But yeah, this going down here does also signify to me that this is dollar index is likely to go up here. But as I said, I'm looking for it to go up only to be as a fake out and then dump lower, which means that this one would also have to come down and either consolidate or reverse. Because this one I think is possible. This one could consolidate down here while this one keeps dropping. Because if you look in the past here, dollar index dropped here, but this was consolidating for mostly. And so this is fine if it consolidates there. This can still be allowed to drop. But it'd be better if this one reverses fully. Again, I'm saying if there's a catalyst, if there's a black swan, there could be reasons that black swan supposedly causes this to fully reverse. You know, as I said, if bonds are dropping here, then that means yields are skyrocketing. And so here we have the yields. The yields are more positively correlated with dollar index. You can see they are skyrocketing, but since these are yields, that means that technically the government does have control over this, which is what I'm saying. Smart money can use those government people as the cover up for what they're gonna do here in the market. And so if they want, some government entity can intervene here, but in reality it's just smart money doing their thing, or it's just the market doing its thing. It's the algorithm doing its thing. Nothing is real. Okay, whatever. So yeah, that what I did just there is intermarket analysis. So again, everything is lining up. Everything we've seen so far is really supporting the idea of this having a fake breakout on the lower time frames and then displacing and running aggressively lower long term. Alright, now we drop down to the weekly chart. On the weekly chart, it's good to do like a sentiment reading or sentiment analysis. And so it's very simple. If the market goes higher here, people get more bullish. Once it breaks out, that is super bullish. As it drops down, people get bearish. And as it breaks out, people are super bearish. So obviously, we're just going to do the opposite of what the crowd believes. So as this keeps going higher, smart money keeps selling more and more. Once it breaks out, people are smart money is selling a bunch to the retail crowd that are all bullish and buying the breakout. So you should view this range as a sentiment like range, which can tell you a lot. Alright, as you can see here, I have a screenshot of COT reports. You can see that in the last 6 months they've been selling, and also in the last year, the last 12 months, midpoint here, they've been selling off here, the banks. And so they've been accumulating short positions. They're obviously selling into the rally here. And you can also see there's a sudden drop here. And if you didn't know, the COT report is based on, I think, the last Tuesday of the previous week. So there was a lot of shorts here on the previous week here, and you can see that this was an up candle. So they're selling up into the rally. So as price is going up, they're gonna keep selling more and more. And so obviously this lends well to seeing this rally up. They keep selling, and then this dumps later on. For right now on the weekly chart, like just short term, like just in a couple next weeks, it is more likely to gravitate towards these highs simply because we've created this low already, and so this swing low here is in control, and so it's seeking buy side liquidity here. Yes, it is a bit messy here. There is a lot of, you know, algorithmic perfection, I would say. You know, it's a little bit there, but overall, if you just measure out this swing from low to high, did it trade to a discount? Yeah, it did. It traded to a discount. And so now it's looking for a premium price, which would be above this high. And obviously, but I'm looking for more, right? For the longer term move, I'm looking up to that Reaper fair value gap here. Up here, then July displacements. I'm marking out like this. That's just like my inherent interpretation. I could just do this, or, you know, something like this. And then for a little bit of intermarket analysis here, here we have gold. The correlation is that whenever dollar index is dropping, gold is easier for it to go up. And then obviously whenever dollar index starts to go up, then gold is most likely to drop. And you can see that pretty clearly here. You can see that dollar index showed a lot of strength here based on just the range, nothing else. Like just within this range, just looking from the upper end of the range to the lower end of the range, you can see that looking back in the past, this here was a very aggressive rally here, and you can see that gold aggressively went lower. And so looking at gold now, you can also see that it's starting to drop, starting to show signs of weakness here, which obviously supports the idea of dollar index continuing higher here. Anyways, you have this aggressive displacement in gold, traded back up into the fair value gap here. You could look at this candle as an inversion order block, and then it's displacing lower. You know, the important fact here is that it's heading lower, and so if these markets are inversely correlated, then this one is going to head higher. It doesn't have to, but again, that's just how we're combining a bunch of different ideas and building it to see how much support there is with the idea that I initially said at the start of this video. And finally, for dollar index here, we have the daily chart. As you can see, it obviously looks really messy. I mean, let's see what we have. We have relative equal lows here, but we also have pretty relative equal highs here. Yes, we do have price go out a bit there, but overall, it does look pretty flat up here. And so both sides are clean, which means technically this is low probability, like from this time frame perspective. Now, obviously, with everything else I've just talked about, we would already know that if we were held at gunpoint to choose a side here, we would choose buy side here because it would serve as a trap for a longer term move lower. But if you were just looking at this time frame by itself without any other context, you would have to wait until one side is taken, and then from there you can see where we're heading, if it's going to continue or reverse. Now, I also want you to look at the market structure here. We have long-term swing low here because we have this swing low, then this on the right we have this higher swing low, then this higher swing low, then over here we have this swing low, same structure here, and then same thing over here. Maybe, you know, maybe not as clean, but it's still important. Overall, it is more likely that it's going to head up here. Now, obviously, it's going to be a very short-term thing when it comes up here. As I said, on the higher time frames, we're pointing lower for long term, and this is just going to get destroyed. But just like looking at on the lower time frame, just daily chart, you would look for higher here. Now, the thing here that I'm kind of like questioning is, you know, are we going to run this high out? That's the only question I have, really. I wouldn't be surprised if we literally just touch the very low of this Reaper fair value gap, and then from there the high is just created and it starts running aggressively lower. Like, I wouldn't be surprised if it does that and doesn't even penetrate it even a bit more. As you can see, this high is a little bit past that price point. In theory, it is possible that it never breaks above that high. And so I guess if you really wanted to be aggressive in a paper trade here, you could place your stop loss above there. That'd be very aggressive though. I think if you wanted to be a bit more reasonable, but I guess still aggressive, you could go up to the weekly chart and mark out that wick right there. And instead of placing a stop loss above that high, you could place it a bit above this constant encroachment if you really believe it's gonna just touch the low of this monthly reaper and then displace lower. Again, I'm not a financial advisor. I'm not advising you to do anything with real money. I'm simply talking from the perspective of a paper trade, a practice trade. And, you know, the thing about this wick here as well is that, as I've mentioned before, you could use the bodies themselves as a stop run once it crosses it. And so it's not necessary for price to trade above that high in order to be counted as a run on stops. And so it is technically possible for us to trade right to that price right there, but never break above this high and then just run aggressively lower. And we can have the bodies close up here on the weekly chart that serve the same function as a stop run. You could also mark this out as a rejection block. So yeah, you could see this as a rejection block, which actually makes a lot of sense. Why does it make a lot of sense? Because a rejection block actually is used for that purpose. A rejection block, all it does is serve the same purpose as running out liquidity. It's the same purpose. The only reason it exists or serves that purpose in the first place is because usually a rejection block is used whenever we are in time distortion. All of this is time distortion. And so it actually makes a lot of sense that if we trade up here and trade into this rejection block, plus could trade into the low of this fair value gap, but never ever break above that price up there, you know, for the purpose of running out liquidity, because the rejection block already does that function. Obviously, can displace lower. So yeah, that actually does make a lot of sense now that I'm thinking about it. Also, another thing I want to incorporate here is that time distortion. I want to incorporate this, right? We have time distortion here. Boom. I've not really talked this much, but if you've seen ICC's video about time distortion, you would know. I think it was this year that he made it. You would know that time distortion, all it is just the algorithm waiting or setting up for a higher time frame instruction. Something to be, it's a waiting instruction basically, but also serves a function of just ripping up traders, disorienting them, and just overall making them lose their patience. Everybody's gonna miss the move here. You know, everything is just against retail, man. It just really is. It just is. On a psychological basis, on a technical analysis basis, it's all against retail. But yeah, anyways, this is awaiting the instructions from a higher time frame. So if I go to a higher time frame, 12 months, right? Basically, I'm going to show you this. I'm going to show you how I can anticipate time distortion ending, which I've always wanted to do. Like, I know what time distortion is, but I've always had this question of like, how can I interpret it? How can I anticipate it ending? That's always been the major question. And with the video that ICT made about time distortion in this year, it just helped. Like, I already kind of knew what time distortion was, but his explanation made it more clear to me and more easily interpretable. And I guess like I understand the function of it more, and that way I can understand how I can anticipate when it's going to end. And so basically what I do is I look at whatever time frame the time distortion is happening, right? Now, in the video, he did say that if it's on a higher time frame, the way to defeat time distortion, or I guess see past it so you can see the true intentions of the algorithm, is to drop to a lower time frame. So you drop to a 4-hour or 1 hour here. And obviously that helps for, like, you know, if you're like day trading or swing trading. But since I'm looking for a very long-term move, then I believe there's nothing wrong with going to a very large time frame. He doesn't show these high time frames. The farthest he goes up to is the monthly chart. But obviously, since I've done this for a long time, you know, I've found some things I like looking at, right? And I think looking at this chart gives me some more info, and obviously more info, you know, that's good. That's good for me. Looking at this time frame, it's time distortion, right? Basically, I go up to a time frame that filters out all the noise, and it just gives me just simple candles. Like on this time frame, you can't really tell that there's consolidation there. They just look like normal candles. Like they just look like, okay, we have a down candle. Okay, it's just coming back up to trade up into a premium array, which would be like this wick here. Like they just look like normal candles. There's no noise. There's no mess. It's just okay, down, up, and so that's basically what I do. And so then I just extend this time distortion range up to the basically where the next candle starts and when the previous candle ends. And that's a very simple way to anticipate when the time distortion is going to end. Now the problem is, of course, is that since it's such a high time frame and you go down to like the lower time frames, let's go to like the week here. You technically still have a bunch of weeks left to really know if it's gonna end right then and there or not. But you could refine it more. But like this is enough already. Like you already, this here is already telling you that yeah, we're close to time distortion ending. So either time distortion is gonna end a bit before this vertical line here, or it's gonna end right at it or a bit after it. And basically, it just makes it easier for you to tell you when you should be paying attention, obviously, and looking at the signs and the signatures of the algorithm. If you go to like a mid time frame from where you marked it, you could divide it up into sections. Like for example, we have 3 months left here. You could divide this on the weekly chart. You take this candle and into here, and in the midpoint of that, time distortion can end here, or you can cut it up into thirds. You know, something like that. But overall, time distortion is close to ending, which is also why I'm saying that we are close to a move starting to run lower. It's kind of like a higher time frame macro. Imagine it that way. You know how in the lower time frames you have the 20-minute windows, the macros. So 10 minutes before the top of the hour and 10 minutes after the top of the hour. That is basically what I am reading here. I'm basically reading here that, you know, we have this 6-month candle closing in a month and 11 days, and we also have the 3-month candle closing in that same amount of time. And so there's going to be a higher time frame close here. And so basically there's going to be an algorithmic run. It's literally time. It's like a macro. I guess if you were to convert it into a macro, I guess you would have to go back all down to like the weekly chart and do, I guess, 3 months back and 3 months forward, or maybe 5 months. How would it be? What would be the most correct interpretation if I were to scale the macro up into a very, very high time frame? So an hour has 60 minutes, so that's 60 bars, and 10 of those bars are part of the macro, which means that 1/6 of that hourly candle is a macro time. And so if I were to divide the 6-month candle into 6 parts, that means there's 6 monthly candles. And if 1/6 of the 6-month candle is going to be a macro time, then that means 1 month is going to be a macro, part of that macro time. So I guess the most proper way to adapt it would be 4 or 5 bars of the weekly chart going back, and then 4 or 5 bars going forward. And so there you go. I just invented a new ICT concept. There you go. Just kidding. I mean, who knows? I mean, it makes sense. I've already explained my thought process in that. So this would be like a very large time frame macro or window of time. So I guess I could mark it out like this. That's your larger time frame macro right there. That's your macro window right there. And so that's where a run to liquidity is going to begin. It's also very common to see the market make a false move as it's approaching the macros, which is what we're expecting, right? So it can come up here, and then from there it can displace and begin the move lower. Honestly, everything is looking great. Everything looks great. Everything looks pristine conditions. A lot of things are aligning and combining. It's not just one thing. It's multiple confluencing things. That makes sense from a smart money perspective, algorithmic perspective, psychological perspective, cannibalizing retail views. Everything is there. It's all there. And then obviously everything I just mentioned for dollar index, you would reverse that for euro dollar and British pounds, cable and fiber. Here we have fiber. This one on the lower time frame, we have really clean lows down here, and so we would look for price to gravitate down there. We have this inversion for a value gap. We also have this bearish shoulder block here. So if we trade up here, very likely to displace lower. On this one, I'm actually not too sure if it's going to break below that low. I guess we should go up to the monthly chart. This one I can believe not making it to that little gap there. I think it's too far for it to reach this breaker. It wouldn't make sense for it to trade there. And so the most reasonable thing for it to trade to on the monthly chart would be this discount wick there. that discount wick, look for it to trade there. No bodies must be left below the consequent encroachment of it. On a daily chart here, this wick here looks like it could be used for supporting price to go higher. That one right there. If it rips through it, then I would look at this one possibly, and if it rips through that one, then this one as well. It's also possible it can break that low. It just depends how severe it drops. If it drops really severely, it depends what I would be looking for. If it does break below this low, then I would highlight a event horizon here from this low to this low. So that consequent encroachment right there for the events horizon. And yeah, that's what I would be looking for euro dollar. British pound, this one is not as flat down here. It's gonna be harder for me to believe this going down too aggressively. Okay, look, we have this wick here on a weekly chart. Let's go down to the daily chart. This here would be an obvious target for sell side. I'm not too confident in it reaching below these lows, but I am confident in it reaching these lows there and running it out for sell side. And then for a discount PD array for it to trade up afterwards, I think what would make the most sense would be this inversion for a value gap right there. That one's a high probability inversion for a value gap because it's below the sell side liquidity. It's right at the consequent encroachment of the weekly premium wick, and then it's also above these lows. British pound does look a bit stronger here in comparison to euro dollar because we have this long-term low here, and then euro dollar only has these relatively good lows, and so it would make more sense for this one to only come up down to here, if at all, to then displace higher. Also, going up to the monthly chart, you can see that it's been having higher highs mostly, while euro dollar here, it had a very large deviation away from that. Like it broke below all these lows while British pound held strong here. Yes, it did break below this one, but overall these are higher lows. I do believe British pound is a bit more stronger in that regard, and also these highs are way closer to it, so it's going to be easier for it to like aggressively run here, while euro dollar is a bit further away from these highs. And so that's my diagnosis or analysis commentary on those two. That's all I gotta say for those two. I mean, honestly, most of the analysis was done on dollar index. I don't really have too much of a purpose to spend time to do more deeper analysis on these ones because it's just the inverse. If dollar index is bullish, these foreign pairs are going to be bearish, and if dollar index is bearish, these ones are going to be bullish. I guess I could add or throw in there some USD JPY. USD JPY is positively correlated though. So this one, if dollar index is bullish, this one's going to be bullish for the most part. And so this one is going to follow with dollar index. For JPY here, I have been looking at it because I am pretty interested in it. I've been looking at it because I've been doing some research a bit with this down here. I'm working on the video. I'm not sure when it's gonna come out, if it comes out at all. I have like some slides I'm making, but it's what I mentioned before in my previous video about oh no, I haven't made that video yet. It'd be the video I'm making. I would make in the future. No, but in my previous video where I did talk about a crash, I think I did mention something with the yen. Unless I didn't, I might have not mentioned anything, and I've probably revealed what video may come out soon, but it's okay. Anyways, this is way overdue for a run lower, the JPY here. Going on the monthly chart, I mean, look at how freaking juicy these lows are. You see those lows there? It's freaking juicy. There's going to be so much liquidity resting below there. So much. If I use the other chart, I think it's FXCM for more data. Yeah, here we go. You can see that we are trading into this. Oh wait, this is not even a 3-month chart. It's on a. Did I say fart? The 3-month fart. This is on a 6-month chart. We have the suspension block, and so this is a very strong PD array. Going down to the lower time frames, you can see that we've never actually even traded to this yet, which is actually important info because it tells us that this is really weak, at least on a larger time frame. We have a rejection block here. That's a rejection block. You can see it from, I think you can see it from literally starting from the, okay, not the yearly chart, but yes, definitely starting from the 6-month chart and the 3-month chart and the monthly chart. And I think also the weekly chart. Yeah, the weekly chart as well. So that point is very important. That reference point right there is going to be really, really important. As you can see, the last time we almost traded to it, we broke above that high, so that's buy side, and we had a very, 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 very sharp displacement lower. And so this is just a ticking time bomb. This is gonna aggressively run lower, just like what happened back in 2024 here. I am basically looking at that, maybe even more aggressive and super, very aggressive, super quick to these lows right there. It's going to be a lot of liquidity resting, and also there's a lot of sentiment built up around this level here for retail traders to view this as a support zone. So obviously it'd be really easy to wreck them. But yeah, it's very, very, very bearish here. And so if dollar index is bearish, then this one is going to run aggressively lower, like very, like super, like you don't even believe it. Like you can't believe how aggressive this is about to run lower. And even to add on to this, we have the retail trend line idea here on the seen from the weekly chart and possibly even the monthly chart. And so like this is just beautiful. Like this is beautiful here. And as I said, if we do have that black swan event in July, like bro, like you guys just don't know what's coming. It's gonna be beautiful. It's gonna be amazing. At least in the chart. At least in the chart. Maybe in real life it might be a different story, but at least in the chart it'll be beautiful. It'll be a very nice algorithmic run lower. Anyway, there you go. I threw in another one for y'all, USD/JPY, even though I wasn't really planning on it. That's all I had to say. Hope you guys have a good day, good night, good morning, good evening, whenever you're watching this, and you may or may not see me after. Goodbye.